I suspect, unfortunately, and I'll qualify the unfortunately, I suspect that gold will continue to do well. Gold does well when people are concerned about the maintenance of their purchasing power in fiat denominated savings products. I think, with regards to the world's reserve currency, which say the US dollar, that those fears are very well grounded. I don't fear for the dollar in a relative sense. In other words, I don't think it'll do poorly necessarily versus the pound or the euro or the Canadian dollar or the Australian dollar. But in an absolute sense, I suspect that the dollar repeats its performance in the decade of the 1970s, where over 10 years it lost 75% of its purchasing power. I wish I didn't believe that, but I do. And if you believe that, you need to look at gold's performance in that same decade, where it ran 30-fold. I'm not suggesting, by the way, Claudia, that gold is going to go 30-fold from here. It's already up 12-fold. But I believe over 10 years that gold will, more likely than not, the nominal price will mirror the decline in purchasing power of the US dollar. Consequence of that is that, yes, I'm bullish gold. Asian buying, at least Asian central bank buying, is a consequence of something that doesn't impact the U.S. as much. The U.S. has basically forced the Chinese central bank and other central banks to buy gold by weaponizing the U.S. dollar, in effect expropriating the SWIFT banking system, which was not U.S. property, by employing the threat of sanctions on the U.S. dollar and U.S. treasuries, and then, irrespective of how you feel about Russia, by stealing $300 billion worth of Russian holdings in U.S. treasuries. If you run a government that occasionally, in a policy sense, runs afoul of U.S. preferences, you need to look at those actions and you need to say, I need to defend myself from that. So in the first instance, central bank buying around the world in gold is often an effort by those central banks to defend themselves from the U.S. The U.S. obviously doesn't need to feel the need to defend themselves from themselves. There's also been a change in China in the sense that Chinese people culturally have had a predisposition towards gold for a very long time, but private gold ownership was illegal. Now private gold ownership is encouraged. I would suspect that there was a deep well of support for gold in China that couldn't be satisfied when the Chinese government felt that gold was a threat to the renminbi. Now that private gold ownership is allowed, there is a deep cultural affinity for China. And remember, too, that China is a society that characteristically saves 40% of pre-tax income. So in addition to there being a proclivity for owning gold, there is also a means to acquire it. Two other attributes sadly lacking in the United States. I don't know that it'll unfold quickly, despite the obvious arithmetic challenges that face the US dollar, and we can go into those later. There's still an awful lot of confidence in the US. The VIX, the volatility index, is dead. It looks like the electrocardiogram of a corpse. That doesn't suggest a lot of fear. There's a lot of liquidity in the system. There is still a lot of fondness in the US for risk-off assets, small tech stocks, crypto, stuff like that. That isn't an economy that would seem to be dominated by fear. Well, mercifully for you, Bullion Star customers can do their own reset. There's no reason why you can't have your own gold standard irrespective of government. Waiting for government to do it seems very far-fetched to me. Two comments on that. The first thing is that people who go into government and people who elect government, frankly, don't want fiscal discipline imposed on them. The purpose of government is to steal from one constituency and deliver to another. That's what it does. Gold eliminates the probability that governments can steal from the unborn. Gold is real money and it imposes discipline. No government wants to be disciplined. They want to discipline other people. The second comment I would make is, even in the United States, were they to revalue their gold, take all the gold that's alleged to be at Fort Knox and revalue it from $42 to some higher number, it doesn't do anything for the deficit at all. It doesn't do anything for the creditors either. Let's suppose that I buy some treasuries, some long-term treasuries. By the way, a highly unlikely event, but let's suppose just for fun that I did that. And let's suppose that as a consequence of $37 trillion in on-balance sheet liabilities, that the government experienced some difficulty paying me. Let's suppose now that I pull up to the White House and I say, hey, Mr. Trump, you owe me this money. I'd like my gold. Mr. Trump presides over a nuclear-armed debtor. The probability that I, as a creditor, could request payment in gold is nil, absolutely nil. So to the extent that they revalued it, they are revaluing collateral that a creditor could never seize. Even the central bankers aren't dumb enough to fall for that. A Bitcoin reserve. What kind of reserve? In the United States, I can't speak to Great Britain, but in the United States, our on-balance sheet liabilities exceed $37 trillion, or $30 trillion net of the Fed's own balance sheet, 30 trillion net on balance sheet debt. But the off-balance sheet liabilities, according to the Congressional Budget Office, exceed $100 trillion. Now, interestingly, the Internal Revenue Service, similar to your inland revenue, estimates that the private net worth of Americans assets minus liabilities, is $141 trillion. So let's look at the reserve math. Collectively, we're worth $141 trillion, and just at the federal level, we owe $130 trillion. That $130 trillion that we owe is growing by $2 trillion a year on balance sheet and another $2 trillion a year off balance sheet. So what reserve? We're $130 trillion upside down. The reserve, if it exists, means that they are printing specious currency units and using them to buy Bitcoin, if that exists. It's not a reserve. It isn't the creation of wealth. It's the creation of a distortion. As to the potential competition for investor interest between Bitcoin and gold, that's a very interesting question. It's worthy to note that the market share of either asset class is less than 1% of total savings and investment assets worldwide. So the relevance of each to the global financial situation is akin to the relevance of a pimple on an elephant's behind. They don't matter. They may matter to each other, but I suspect there's plenty of room for both. I suspect myself, people are attracted to Bitcoin because of its price escalation. People who look at its utility probably think of it more as an anonymous medium of exchange, which is very attractive, to be honest. Gold is also potentially an anonymous medium of exchange, but it's much, much, much less utilitarian. You can get Bitcoin across a border in a cell phone. Getting gold across a border is a bit more challenging. So I think that's a much more interesting question. I don't see a backed currency simply because the history of governments has been, unless they owe the money to somebody more powerful than themselves, they don't pay. Why would you as a politician subject yourself to discipline when you ran on the specific promise to be undisciplined? And why, too, would you constrain yourself to creditors when you have guns and they don't? When I was young, I invested in any asset class that was amusing to me, and I got spanked for that. Now, I invest in industries that I think I understand and where I think I have a competitive edge against most participants. So I invest in natural resources, the whole range of natural resources, and I invest in conventional financial services. Not fintech, nothing like that, but insurance, community banking, wealth managers, asset managers. I've been involved in both of those businesses for 50 years. I'm not a technology guy. I understand the basics of cryptocurrency. I've invested a fair amount in technologies around trading commodities, including gold and the blockchain, but I wouldn't describe myself as knowledgeable enough to own Bitcoin, so I don't. Silver is probably the place, the asset class, that the speculative precious metals adherent should be participating in. I've been through 3 precious metals bull markets in my life, and they follow very predictable patterns. The gold, physical gold leads because the fear buyers first. When the momentum is established, leadership changes from gold to the senior gold stocks, and we've just seen that. At some point in time, the momentum in the precious metals price verifies the precious metals narrative to generalist investors, and the generalist investor comes into the market. When that happens, leadership changes from gold to silver. I'm not sure why it does. I suspect it's because of the lower unit cost, or perhaps the reputation for upside volatility. I don't know that it does, but I've observed that it does. And when that event happens, you won't need Rick Rule to tell you. We won't be talking about a move from $36 to $38. We'll be talking about a much more dramatic move. And I have a lot of confidence that will occur. I have no idea when. And the truth is, I've stopped caring when, because the moves are so dramatic that the rent your portfolio gets paid on its silver holdings justify the time that you spent waiting for it to occur. The very small population of viable silver companies does even better, because the consolidated market cap of that sort of silo of reasonable quality silver equities is so small that when the generalist investor tries to crowd into it, the market caps simply can't contain the money. In my first bull market in the 70s, watched Coeur d'Alene mines go from 10 cents to $65. I was too young, too dumb, too poor to participate. But the second precious metals bull market I was prepared for. We had 2 horses in that race, Silver Standard, which went from 72 cents to $45, and Pan American, which went from 50 cents to $45. They were extremely pleasant events for a young man. And I'm hoping to repeat that sort of fortune. Maybe not with the same percentage gains, but I'm hoping to repeat that fortune, that sort of circumstance in this market. And I'm fairly confident that that will occur. I've watched the last 3 markets, and none of them had anything to do with the industrial side. The truth is that gold does well when people are afraid, and that's usually, in terms of the broad economy, a counter indicator. It has been, in terms of its dramatic moves, always a monetary phenomenon. It's useful to the monetary case that the industrial case exists because some silver is destroyed in industrial processes. It's supply that goes to supply heaven. Damn near all the gold that's ever been mined, we do a weird thing. We take it out of a hole in the ground called a mine. We put it in a hole in the ground called a vault. But we actually use silver. Some silver goes to silver heaven. It gets destroyed as a germicide, or it gets used in a solar panel. It doesn't get recycled or something like that. And so you have circumstances where the industrial utilization of silver exceeds the amount of silver newly produced in the market, either via direct mine production or co-product production or recycling. We're in the midst of one of those periods today. But in my experience, not going back to the beginning of time, but going back 50 years, the real dramatic increases in the silver price are always monetary. When people talk about the former all-time high price in silver and they quote $50, that's a huge mistake because that's assuming constant dollars. You need to talk nominal dollars. My suspicion is that if you inflation adjusted that $50 number, you'd come out with a number closer to 150. I think people make a mistake with the headline prices that they assign silver. I don't like to do that anymore. I don't like to get people too excited. If you give people some number, they ignore the rest of the interview and focus on the number. And I think that's a mistake. I think people need to familiarize themselves with the entirety of the subject of gold and the entirety of the subject of silver. If you give them a number to cling on, they forget the why. And they can easily get shaken out of a good position that they should hold.